Hi folks, Derek Jones, EOS Property Group. I'd like to take about 10 or 15 minutes of your time just to run through our armchair developer concept. It is quite different in real estate investing, and we'll show you why and how it works and some of the results that you could reasonably expect to achieve if you decided to get yourself involved in it. Now, EOS Property Group's been around for about 18 months, and we looked at the notion of property investing and the fact that we're in a fairly flat market. So we thought we'd have to come up with something that is quite different so that our clients are the ones that are going to get the most benefit out of being involved in our project. And this is what we've got. One of the first things that we wanted to achieve and to ensure was that to make sure that our clients always got a property or took ownership of a property well and truly under market value. Now, the aim that we have is to try and get this property to our clients so that it's at least $100,000 under market value. So that's the first thing that we wanted to achieve. The second thing that we wanted to achieve was, because the purchase price was significantly lower, then what it meant was that the rent return on these properties is significantly higher. So in effect, there's a differential of about 2% return on investment by using an armchair property than a non-armchair property. Now, because our properties have got inbuilt equity and high rent returns, what it means is that when you go to your broker or your bank, an armchair property will be much more beneficial to you than something that you've simply purchased off a real estate agent. And the reason being, it's that high profit and that high rent return. The other thing is, and it gets back to our original point, was that if property is going to be relatively flat, as some of the experts are telling us, for the next 2 or 3 years, then we needed to provide something quite different but attractive and profitable to our clients so that they would continue to invest even in the market that we've got at the moment. And most of you would be aware that there's that saying goes around that says you make your money when you buy. Well, if you can buy under value each and every time, then you're certainly on the road to success. Now, because we're talking about a development process, it's important that there is somebody who's there to pull it all together. And that's where we organise and access a professional development manager who will work on your behalf to bring the project to some sort of conclusion. So it looks a little bit like this. We find a group of investors. Now, the size of the group that we find is determined by the zoning. So in other words, if we can get 4 units onto a block, we'll find 4 investors. If we can get 10 units onto a block, we'll get 10 investors. Those people form a joint venture who then go and employ on a contractual basis the development manager. And he has obligations in order to bring that project through to conclusion on time and on budget, so that at the end of the project, each of those investors takes ownership of their own unit at a significantly reduced price. So that's what the armchair developer concept is all about. And the reason we call it an armchair, obviously, is you don't need to bring skills to the game. You don't need to bring time to the game. You don't need to bring knowledge to the game. But it's the project manager or the development manager who will do that all on your behalf. Now, basically, it's a 3-part process. The first thing is land. You've obviously got to have the block of land in the right location, the right zoning, the right size, and at the right price. Once we've found a block of land that meets all of those criteria, we then undertake what's called a feasibility study. Now, that feasibility is the ins and outs of the numbers of the project to determine whether or not it will work. Now, if we believe that the project will work, then we'll provide all the information available to our clients. And in this case, we're going to use a block of land that has zoning suitable for 6 units on it. So we present that to our clients, much as we will be doing over the course of the next few weeks. And in this case, each of those 6 clients contributes $130,000. Now, the numbers you're about to see in this and the next couple of slides are reflective of what we're actually doing for our clients at the moment. And in some cases, they're actually a little bit on the conservative side. But anyway, these 6 people put in their $130,000, and that allows us to own that block outright. There's not a debt on that block at all. And might I add that each of the 6 people have their name on the title, so there is a security attached to that as well. The development manager then takes over through the construction phase, and this whole phase is probably 99% done and undertaken by the development manager. It is him that coordinates with the architect. It is him that coordinates with the planning department. It is him that coordinates with the finance brokers. It is him that coordinates with the builder. It's him that coordinates with anybody else that needs to be involved. So he will submit a set of plans to the planning department, and once they're approved, he'll then coordinate the building project on your behalf. Now, in this particular case, the feasibility suggests that we can build these units for $260,000 each. So he will go and secure funding for that. So it's at about $1.8 million, just under, and that will allow the project to then be built according to plans and specifications. And just bear in mind that during the construction phase, there is no money required from the individuals. That's a very important point. Now, once the project is then completed, we then go to the wind-up phase, or the conclusion phase, if you like. And there's a bit of work required from you here. But it works like this. So once the council has said, yes, that's fine, it's now ready to be strata titled, the development manager will organise that for you. And we have a project account there with that all the construction money has been drawn from over the course of the construction project. The final step is that each of the 6 investors goes back to their own broker or their bank, or we can provide one for you if you like, and organises the refinancing of their unit. Now, part of the refinancing process is about taking ownership of that strata title property, but it's also about repaying their share of the construction loan. So each of the investors does that, repays their share of the construction loan. We wrap the project up. There's no money in the account, nobody owes anything, and you've taken ownership of your own unit at a significantly reduced price. So some of the numbers that we've been achieving for our clients look very much like this. And as I say, these are slightly on the conservative side. And in a number of cases, we've got results that are much, much better than this. But it looks like this. The final value of the unit, and this has been established by a valuer, $500,000. The initial land purchase, the buy-in, if you like, was $130,000. A further construction loan of $260,000 was sourced, so the total financial commitment from each of the 6 investors was $390,000. Now, you don't have to be Einstein to work out that you've made a profit or a gain here of $110,000. The difference between $500 and $390 is $110,000. So you can see that you've actually done very, very well out of this process. So just in case you're not sure as to why this is a good process to be involved in, 1, your rent yields are much, much higher because you're an armchair developer than if you're just a normal property investor. Because you've got these high rental yields and the inbuilt profit, it means that your capacity to borrow additional money and build your portfolio is enhanced, and therefore you can accelerate your property profile growth. You don't have to sit around on your thumbs waiting for the market to move. And that's the other important point too. So, and because of all of that you've got in one of these properties, it actually supports everything else that you're trying to achieve through your own property investing. And lastly, but by certainly no means least, this particular property actually provides you with a quick capital gain. And as we say, if you're in a flat market, that's something that you really, really need. Look, we've got a number of projects underway up in the WA Pilbara at the moment, and I'll just go through the first one here. This one here in Somerset Close. You can see each of our investors, the original buy-in and construction loan added up to $365,000. We've had a valuer go through these and say they'll be worth $590 on completion. That gives each and every one of our investing clients a profit of about $225,000. Now the rents up there are enormous, and we've had real estate agents tell us that these things will rent at about $1,300 per week, which gives us a rent return at 18.5%. But if we look down this column here, you can see some really significant profit margins to be made there. And over here, you can see some really high rent returns. But look, investing in the Pilbara is not for everybody. And there are a number of people who would prefer to invest in the Perth metropolitan area because A, it's a state capital. The area that we're focusing on is within 5 kilometres of the Perth CBD, so there's a high level of security involving yourself in an armchair process closer into Perth. But these are typical of the numbers. So total buy-in and construction loan, about $400,000. The valuation, $500 to $530. The profits of $100,000 plus. And if you put a pretty good furniture pack in there, you're also looking at rent returns of 9%. Now, I'll ask you where you could achieve those sorts of results. Where else in Perth could you achieve those sorts of results within 5 kilometres of the city centre? New property, $100,000 plus profit, rent return 9%, and we're not even talking about things like depreciation and negative gearing benefits and all those sorts of things. But you put those through in your calculators and you're looking at a cash flow positive $100 per week thereabouts. So the whole notion of armchair development is all about giving our clients options, because we're not about a one-size-fits-all investment strategy or model. It's about providing our clients with a whole range of options. And obviously these are just but some suggestions. You might have some other ideas in mind, and you could probably see where an armchair property would help. First of all, it means that you're holding an asset $500,000 plus with absolutely very little or none of your own money involved. And that you can't speak against it. Second thing, because a lot of these properties have high cash flow, it means that some of our clients are going to be looking at using that surplus cash flow in an effort to pay down that loan. And that means over time they'll own it, and then it will become owned outright, and it will be contributing rental income into your nest egg as you move forward over time. There are other people who are looking at an armchair property as complementary to the other properties that they already have, and they would see that the surplus cash flow that can be achieved through these property investments will actually help and facilitate and support their existing portfolios. The other thing is that because there is cash flow to be made with these particular investments, and if you're somebody who's getting closer to retirement, you might see some benefits in having an extra $80, $100 per week coming into your pocket. And of course the last one is, and this one sort of rattled my cage a little bit in the sense that I was always a buy and hold type investor. And then we started looking at the numbers and the returns and all, started playing a bit of brainstorming, if you like. And we recognise that there are some benefits to be gained from a quick sale type process. Look, there are some tax issues as well, but there are a number of benefits to be gained by putting that $100,000 plus profit back into the mixer. So it could be money for holiday. It could be money to pay down your home mortgage. It could be money that could be used to pay down other debts and therefore improve your cash flow through that process. So as you can see, there are a number of benefits, and as I say, you might have a number of other ideas as well. So you might think, well, that sounds pretty interesting. What else do I need to know? Well, first of all, you probably need to understand that you're going to need about $130,000, give or take a little bit, to get involved in these projects. Now, that doesn't mean you have to have that money in cash. It can be available to you in equity in your own home, and we can show you how you can work that out. The second thing that you may like to do is to have a look at what projects are available on our stock list. Now, to be honest with you, we tend to do one project at a time. So if you jumped onto our website right now and looked at properties and armchair developers, you may not see anything that's currently available. But what's happening in the background is we're working towards our next project. But what's up there at the moment is a list and the details associated with each of our current projects, so you get a good feel for what we do with each of those. And the key step, I guess, and this is non-negotiable, if you want to get involved in an Armchair project, you will need to speak to Brad Blaxall, our broker. Now, the reason it is Brad, our broker, because Brad knows the financing intricacies of such a project, and he knows what's involved all the way along the line. So have a chat to Brad, and there's his number there, and he'll be able to give you the stamp of approval for your involvement in these projects. Everybody who gets involved in these projects will need to do that, so at some stage or other. So you might want to take that step a little bit earlier than otherwise would be the case. The last thing, if you want to talk specifically to either Chris Granary or myself, Derek Jones, there are our mobile numbers and our email addresses. We'd certainly prefer to talk to you over the phone because conversations can be conversational rather than backwards and forwards email traffic. Yeah, give us a call, drop us an email, and we'd be more than happy to answer your questions. Thanks, folks.